Welcome to Zen and the Art of Real Estate Investing, one of the fastest growing real estate investing podcasts in the world. What if you could learn from experienced real estate investors? Find out what got them to where they are now. Get insight into their daily habits and take these insights to inspire your own growth. Each episode, Jonathan Green shares an in-depth look at the mindful approach to real estate investing. Jonathan is a lifelong real estate investor and the founder of Streamline, a data-driven, investor-friendly, independent real estate brokerage located in Madison, New Jersey. Whether you're looking to start from scratch, get to the next level, or just for a straightforward and honest approach to real estate investing, this is the free mentorship program you can take with you anywhere. Now, here's Jonathan.
Welcome back to another episode of Zen and the Art of Real Estate Investing. I like when we have a niche episode that's a little bit different, and that's what we have today with my guest Blake Rodgers of Steel Peak. We're talking outdoor industrial storage. Now, what are these targeted sites that they're looking for, which you're going to hear us talk about? Contractor, supplier, bulk material yards, heavy equipment dealers and rental facilities, equipment maintenance facilities of all types. So think outdoor, but think industrial. This is different. I can't wait for you to hear it now. This is episode 279 of Zen and the Art of Real Estate Investing with my guest, Blake Rodgers. Blake is the co-founder and principal at Steel Peak. He's responsible for formalizing Steel Peak's investment strategy, overseeing leasing and leading acquisition efforts to aggregate a portfolio of industrial outdoor storage throughout the Western U.S. Blake, welcome to the show.
Thanks for having me. Appreciate it.
Yeah, I'm excited to get into kind of a niche of an asset class that we've only had a few episodes on. But I know you didn't come from a real estate family. You didn't have necessarily a large interest growing up in real estate. So how did you end up in real estate and why?
Yeah, so I kind of got lucky and fell into it in college, which was good. It was probably the best thing that happened to me in college. Didn't learn as much in the actual courses, but the social side of it that I got was awesome. So I kind of fell into joining the real estate club or real estate society at my school because a lot of my buddies were in it. Yeah. And so I was trying to figure out what I was interested in. I played college football actually. So my original goal was get a scholarship, go to the NFL, and in college didn't end up doing as good as I wanted to. And so I was like, I got to figure out this business side of it. And so I majored in business. I kind of got into real estate through the club at my school, got involved on the board. And then I was actually in charge of internships for that board. And the first one that came in, I just took it. And so my first ever job was as a commercial real estate broker, just kind of a intern for a boutique shop in San Diego where I'm based out of.
Yeah, that's awesome. And I think, I've actually spoken to a couple college real estate investor groups, and everyone who asks me when they're in college, what should I do? It's one, find meetups, but actually find the club at the college. They're really great because everyone there, it's your free time in college. So if you're going to that, you really want to be there. Did you find that people were kind of all motivated? Like you said, you had friends in there, and it's you're almost pre-motivated for the world because you're still in college, but you're already thinking ahead.
So 10 years later now, my business partner who we launched Steel Peak together was from that real estate society.
That's awesome.
Yeah. So I met him there. I mean, we both were in different fraternities as well. And so we were kind of in the same social circle, but it was really because we always saw each other at all these events, even throughout our whole career, the last 10 years. We were the ones going to the NAOP events, going to the ULI events. And so we'd always see each other and be like, hey, when are we going to start buying deals, dude? And then that's kind of how we started talking about the early kind of beginnings of our company now.
Yeah, I've had a lot of people who were former athletes, some all the way up into professional sports. And I played basketball in college and, had ridiculous dreams of going to the NBA, which were stomped out pretty much right away. But one thing that I found is that people who played organized sports and were very involved all the way up past high school and into college and wanting to go further, they understand that everything is a team game. and they get into real estate investing knowing that they need resources from others, where I think people who find it via social media are just like, me, how much money can I make? Did you feel like it was easier because you had that teamwork kind of ethic from sports?
Sometimes I feel like I delegate too much. That's how, because I was a linebacker, and I was like the captain of the defense always my whole life. And so I guess I do have some leadership skills from that I never thought would translate into business. But I think the biggest part, you hit on it perfectly, was this is a team sport, real estate. It really is. Like if you want to go far and you want to scale, like anyone can do like 1 or 2 deals a year by themselves or with, vendors and stuff like that.
Just get lucky. Yeah.
Yeah. But if you want to go really big, you got to find a partner, you got to build a team, you got to do it the right way and build an actual business. So it's been good to have that skill set.
Yeah. And also interesting, your story is that you grabbed the first internship, so it could have been anything, but most people find residential real estate first because it seems easier to get into. And even on the agent side, it seems easier. There's just more opportunity. Do you think that helped you by going into commercial and seeing what was that and seeing that like there's much more scale in commercial?
That's what attracted me. I honestly was thinking at first it was kind of probably not the right way to think about it. I was like, okay, if I'm not going to the NFL, how do I replace NFL income?
Yeah.
And so I was like, I need something that's uncapped that I can go, grind as hard as I can. And if you're the best, you're making a lot of money. So that's what originally kind of drove me. And then I think it also fit my skill sets as well, just more like finance kind of minded versus I wanted to be in more of like a numbers game than emotion game, but I still enjoy both the communication and kind of social side of both, residential agent and commercial agent. There's a lot of similarities still.
Yeah, I do. I agree, though, that, commercial, basically, the bigger you get, it does come down to a numbers game. You can still get emotional about the properties, but you're looking at the data. On residential, you're talking about appraisal values and, I might want to live here. And it's a whole different story. But, real estate at its core, the agent business is still the same, still a people business, not a sales business, in my opinion.
Yeah, I 100% agree.
Yeah. So you eventually went to work for JLL also. And is that when you got into industrial?
Exactly. Yeah. So about halfway through my brokerage career, landed a job at JLL. I was actually looking for jobs with developers, and I wanted to go on the principal side back then. I was getting interested in it because I started out at boutique shops, and at boutique shops, they're great if you have a good mentor and you get to do a bunch of deals with the right team. But I wanted to start doing bigger deals and get access to like larger companies. And I wanted to see what the corporate kind of side of the business looked like. So I went and talked to all the big shops like JLL and landed on an industrial team, which I got really lucky because at that time, that was right when industrial kind of shot through the moon and values went up. It's when Amazon was taking down a bunch of space. COVID hit as well. And there was a surge in industrial demand. So it was a really good time to kind of get started in it. It's not, as good right now. The commercial market's it's been rough lately because it went up so quickly after COVID. And so it's been adjusting. But JLL was a really, really good, like that's where I feel like I got my master's in real estate was at JLL.
Yeah. And I mean, industrial is an interesting asset. I actually have been a 10% owner in this big industrial park since I was a kid. I literally owned it in trust when I was a kid, and then it transferred as an adult. And I just sold off my 10% like a year and a half ago. So I really saw industrial assets for what they were. It started off, and I'm wondering if you've seen this. What we had was what now looks more like, you're in the San Diego area. So it's like now where they put like these trampoline parks. It's like a regular, like cool industrial park that has more of like a kind of outdoor mini mall feel. But I remember in the beginning, it was more like manufacturing and stuff. And then over time, because it was in a hot area, like other places like TV studios and stuff started to move in there. Have you found that in industrial, just in general, the use cases for the properties have changed dramatically, and that's kind of opened it up a lot more as well?
The properties that are closer to city centers and closer to like homes and populations tend to start going more towards like flexier uses like that. That are like, the CrossFit gym, all that type of stuff. And now there's so many health and wellness like concepts but like, real estate over the last couple of years because of COVID took a huge turn into essential services and essential real estate. So a lot of these like parks just by necessity had to go lease a lot of their space to more service-based businesses too. So I've seen, gosh, I never thought I'd be doing what I'm doing now. Like I'm literally buying like junkyard type deals.
Oh, okay.
But I started in like class A big box Amazon distribution facilities and like representing owners who were buying land and building those sites and then leasing out those parks, like million square foot type parks. Yeah. Now my business is buying little contractor yards. So it's funny. There's so many different types of real estate, even under just the industrial umbrella.
Yeah. So with these small junkyard type properties, like what's the play on that for you guys?
So we're buying them from mom and pop owners. The space is largely mom and pop owned still, or owner occupiers that have kind of small local contractor construction or maybe trucking type companies in there.
Right.
So an example of like a deal we will buy is like a small building with a large excess yard. So usually the building would cover almost half the site, and the stuff that we buy, it covers less than a fourth of the site. So the component that is most attractive is the outdoor storage and the zoning. So we're buying these sites that are heavy industrial zoning. These companies, they have to have them. They're like mission critical for their business.
Yeah.
So you'll go buy like an old tired kind of like auto salvage yard that has a small building with a huge lot that usually that should be developed with like a 50,000+ square foot building on there. And there's only a 5,000 foot building on there. Little maintenance facility or whatever it may be. And so you can take that from that small mom and pop owned business. They've been there for 40+ years. They want to retire, wind down. We'll give them time to move out. We'll buy it. We'll rehab it. We'll make it look nice enough for a new national company to come in. And then we'll go lease it to like United Rentals or like a big, like equipment rental company, someone that's like publicly traded. So we're buying small deals. They're really like $5 to $10 million each, but we're buying like 10+ deals a year. And so we're building a portfolio of this product and owning and operating it.
All right, cool. So, I mean, you're not expanding the existing buildings, like you want actually the space for the tenants or the buyers of who you're bringing in, which could be a more upgraded version of what, a car junkyard looks like.
The most value is in the yard space. So in the excess land. So I'm actually demoing buildings.
That makes sense.
Yeah. I'm taking like sites that may have like a bunch of small little buildings and we'll demo like 3 of them and keep 1. And then the rest will be opened up. So there's better access. Trucks can go park there or drive through that area. So we're even like demoing office buildings and stuff like that. So it's actually really interesting how that's like, so it's gone full circle.
Yeah, you're leaving it mostly bare bones so that someone can come in and figure out their use case instead of kind of overdeveloping it and then losing some potential clients who might need the space.
Yeah, if groups, tenants that want to lease it long term, want to customize the space a bit more, we're open to doing that, but we just kind of get it into like a really solid condition for it to lease up or to gain traction on the market. And then if they want anything custom, we'll help them do that inside what's already available, but we're not actually doing any development just because it's so tough to get things permitted, especially I'm based in Southern California. So it's really hard and we're buying a lot of stuff.
Supposed to be getting a little easier, but no, I don't think so. It's California.
I mean, when you're buying stuff on the West Coast, it takes a year or two to even get anything done. And so we can't wait that long. It drives down your returns unless you get the deal for a really good value. And so we're just buying all existing properties.
Yeah, so the tenants aren't going to develop that either because of the time frame, or are some of them also developing and then you end up with just a triple net?
I've got some tenants that will build out certain things, like they'll punch in a new roll-up door into the warehouse.
Yeah.
They'll add like a wash bay so they can wash their trucks or their equipment. They'll fit out the office or build out like showroom stuff, but nothing substantial really.
Yeah, I mean, it's almost like giant land flipping in my head, because of you're recreating an asset with a better viewpoint to then lease it out, and you're able to get it at, how people are trying to get still old self-storage facilities. It's like the mom and pops are great because they're just not running, a real business there. They're just running a legacy that they eventually just want to get rid of because their kids don't want a car junkyard. I mean, nobody does except the old timers who still have it, and they don't even want it. So it really makes sense that your turnaround involves a lot less than what other people are talking about in terms of like hotel conversions or trying to convert office buildings. You're able to turn these pretty quickly, I would suppose.
Yeah, we're buying existing deals and they're all value add profile, and we're going in and we're doing improvements like really quickly, hopefully in a couple months, as quick as we can, and leasing it up and stabilizing it and refinancing it or putting financing on it. And then we'll hold it in a portfolio, and then hopefully eventually one day either recap that with a big, equity group, or we'll go sell it to a big equity group or whatever, ends up happening. But that's the goal, is to aggregate a bunch of these and add a bunch of value to all of them, lease them up to good tenants.
When the tenants come on, are they all on basically triple net? So you're kind of really like, you're done after that?
That's the beauty of it. They're all single tenant triple net deals.
It's the best.
Yeah.
You're really reducing the friction of it too, because you don't have to do a big rehab. You're creating, getting it to one building and then just letting them figure it out. So I suppose that you also can develop a backlog of people looking for these spaces, because it's not like there's a million brokers like doing this. So, once you find a new space, you probably already know who to go to for the next one.
That's how I got into it, was as a broker. A couple tenants asked me to help them find some of the space, big, corporate companies, and they couldn't find what they were looking for. And the supply was so low, there was literally nothing on the market at that time. And I was like, okay, why is no one specializing in these? There's so much demand, and the supply demand imbalance was so out of whack that I was like, I'm going to go 100% spend my time on this and specialize in this it's called IOS, industrial outdoor storage asset class. So that's how I fell into it. It's really like, because once you find one, you're right. There's companies that have been like looking for this type of space for like 2+ years, even. Where in most other asset classes, maybe they're out to market for 6 months, around there, probably on average. So it's pretty interesting.
Yeah. Can you go over a little bit more who your ideal tenants are? I know you said like loading or distributors or something who obviously need a lot of truck space, but who else fits the profile for tenants? So you kind of know like, hey, this is our wheelhouse for who we're going to go to.
Yeah. So the tenant base in iOS is really kind of twofold. It's construction related tenants, and then more trucking, transportation.
Yeah.
And so we're a bit more focused on the like service related tenants. So more like contractor type guys. Mm-hmm. So any sort of construction company, the equipment rental guys are good, building materials groups, groups that touch any form of like the utility providers, or even the big utility providers in these cities we work with too. A lot of our tenants, like their clients, are the government. They're doing like a lot of public work too. So they're definitely like sticky in these locations, and they have to have them because they have long-term contracts to go, demo the bridge down the street and build a new bridge or a new freeway or whatever they're doing. Right. Like these are all those groups that come in to do those projects that are like 5 to 10 year big mega projects. So we're like tracking that type of stuff, but the tenants are mainly for us are more construction focused.
Yeah, it does seem ultra sticky and also unaffectable by AI, which is important. I mean, obviously there's people building data centers. That's a kind of different thing, but these businesses are the type of businesses that aren't going anywhere. So you're not going to have trouble with your tenants later on, which, the big con of large scale triple net one tenant is when the tenant leaves, you don't always have someone just lined up for it because it's specific. But if you have sticky tenants that are, locked into government contracts, you're in pretty good shape.
Yeah, exactly. And the issue with the big box industrial warehouse buildings lately, as you know, is they just overbuild it whenever there's a run up in the cycle, and whenever debt is zero, they just build as much as they can, right? And so now we're sitting on a bunch of vacancy for big industrial. For the stuff that I do, you can't really get this like approved to build in a lot of areas. Like cities don't really want it because it's like no one wants like 1,000 trucks driving down the street. So it's definitely in like heavier areas. So supply is like going down. So that's why it's a really interesting kind of fundamental story there.
Yeah, and I think it gives you a very tight buy box of what you're looking for. And also it's an extremely mom and pop buy box, as you said. It's people who've been operating this type. I mean, I don't know why, like in my head, when you said car junkyard, that's all I can see, because that's clearly always like just a shack with like 3 lifts and like a billion cars, just like in weeds and everything.
Yeah.
Like that's an ideal space for you, right?
Yeah, exactly. And they're usually close to populations because people are going and dropping off, the salvage parts and stuff like that. So yeah, it's really interesting. A lot of these uses, like every day I come across a new use where I'm like, wow, that is so interesting. Like this guy's like blowing up the side of a mountain for his concrete business. And it's like, you just would never think that these uses exist. It's funny. Yeah.
Yeah. It's interesting though, because even coming in, I was like not sure what the iOS was going to be. And now thinking about it, it is really niche, but I think that that's always helpful. From all the people I've talked to, so many people on commercial real estate over these episodes, the more niche, it kind of makes it easier for you and easier for when you're finding, lease outs and partners and stuff, because you know exactly what's going on and you're not trying to go way outside of your scope. Has that helped you? And has there been any times where you're like, hey, we need to expand a little bit into more like a little bit different part of industrial?
In the beginning, when we first got started, we were like, let's do, as many deals as we can. And we got to be entrepreneurial. And if like a business park deal comes across my desk, like, let's look at it and let's not like tell brokers no. We want to be the yes guys, right? And then
until you say yes too many times, right?
Yeah. And then we like tied up one of those deals and we realized we were a little over our skis, and we're like, let's just focus on what we're really good at. And you know what? That was my focus at JLL for a few years, was this iOS product. And it's relatively new. So we kind of have a competitive advantage with like all the tenants that I used to rep and work with. And I did a bunch of deals with investors before. So having that really specialized, like this is our niche and we're only doing this. And in these parameters, this is all we buy. Some guys might buy different types of iOS even. We're niching like down within our niche, which is crazy. So as far down as you can focus, it's way better, even for raising capital and attracting investors, whether you're syndicating deals or going more private equity or institutional capital. It's people want to work with, experts in their space.
Yeah. Are you guys doing both? Are you using, different types of capital stacks and doing syndications at this point?
So we started out doing syndications. We've done a couple. We're buying our 10th deal right now in the last like 18 months since we started.
Yeah. Wow. So, that's a lot. Yeah.
In order to do that, we ran out of friends pretty quickly. So we had
like,
to go.
Another junkyard, really? Okay.
Yeah. They're like, hey man, I already invested in 2 of these. So like, give me a break. It's only been 12 months. So we have connections, and my business partner came from more of the capital side of the business. He was arranging debt mostly, but a little equity as well. So he understands that language. And so he's built up a pretty big book of groups that we've been fortunate to work with now, private equity, investment kind of managers. And so we've been investing alongside those guys, and we've done probably like 6 institutional kind of deals like that. And so for what we want to do in order to scale, we're going to continue probably on that side of the business where we have one equity partner on the deal,
Yeah. But the institutional connections could play a big role, because then if you do want to package them up in something tidy for someone who wants something that's like a turnkey, portfolio of these iOS assets, like they're going to be in the same kind of groups as what you're dealing with now.
Exactly. Yeah. We're already planning our exit like far in advance. And we're talking to those groups that want to buy just portfolios of this stuff in the future.
Right.
And so we're connecting with all those guys, and we're like, hey, how should we be thinking about constructing our current portfolio so that when the day comes, we're ready to go, and it's a product that people want. So that's kind of the whole game.
Yeah, that's exactly what I was thinking. It's like now if you have those relationships, you can curate the portfolio based on what their needs are. And if it's their needs, it's going to be the other players in the space as well. There's not going to be that much differentiation. They just want something that's already working. I mean, that's the big buy from industrial. They don't want to, from institutional, they don't want to come in and have to operationalize something. They just want to buy it fully operationalized, and they have the money to pay for it.
There's always someone bigger that has more money than you.
Right,
and when they do have more money than you, they have to deploy that capital.
Yeah.
And so they have to do bigger deals. And so we're just becoming that deal, like our goal is to just become one of those deals for one of the bigger guys one day. So we're just the small guys starting out.
I've had a few self-storage syndicators on who, same goal. It's like we're rehabbing these just so we can sell it out, and it makes sense because they know their audience and their end buyer like you do. So it really helps you. It just seems like you can stay really, really like tight and focused in this business, which is why you can acquire that many in 18 months, right?
Yeah, and then you're showing brokers that you're credible too, because you're super active and they know exactly what you want. And whenever they see a deal that looks like something that you would buy, they think of you first because we're like the iOS guys in that market. Yeah. So it's helpful in that in getting more deals as well, but also in building the portfolio. I would love to keep a lot of this too. We would love to just manage and keep a lot of this. So there's different routes that we can go. We're probably not going to sell all of it, but we want to be opportunistic for sure.
Yeah. Well, I mean, going back to your broker days, it must be awesome to know that like there's not a lot of players in your game. So those brokers really appreciate you because they're like, we only know 2 or 3 people who even can take down this asset class and who understand what to do with this type of property. So you probably don't really have to do any outbound. Of course, you can be looking around for the mom and pops, but like the brokers are just going to be coming to you with deals. And as you've said, and as I've said for all commercial assets and residential, if your buy box is tight enough, they're just going to ring you when it's in the buy box. So you're already like curated a potential of when Bob Smith calls from this brokerage, like it's going to be pretty close. So you're really close to just figuring it out.
That's exactly right. Yeah. So people know like what we're looking for, and they don't send us deals that don't fit. So that helps a lot. And you'd be surprised that there are a few buyers that have entered the space over the past couple of years. I started working with some of the biggest groups that were buying this product before, and those guys have become really big. And now there's been a bunch of, smaller entrances into the space, but it's still comparative to any other asset class. Like it's probably like self-storage, like a long time ago when it first kind of started to go institutional. That's kind of how this space is.
Yeah. And I think for just kind of newer investors or people who are regular mainstream investors, they kind of think industrial is all the same, but there's so many different parts of industrial real estate. Have you found that people, when you're first either pitching them on, hey, this is what we do, or even just explaining it to someone, that they're just thinking it's a different product? Because even coming in, as I said, I was trying to figure out like, what is industrial outdoor storage going to be in general? And it's pretty cool because it's something so different than flex space and even your large scale industrial, like you said, where they overbuild. How's that discussion going? People must get interested more because they're like, oh, wow, actually, I didn't realize industrial was this diverse.
You have both sides of the coin. You have people that get really interested, and then you have people that just like are like, no, I can't figure out what you're doing. Yeah. They like even like lenders and equity groups, like we have to educate them a lot, like on what we're doing, because it's pretty new and it's smaller. So the deal sizes are so small that a lot of these groups, they won't even put out this small of checks. They want to put out bigger checks on deals. But it's been a big kind of educating process. But a lot of people get it, and it's you're right. It's like so new and interesting sometimes to people that they're like, I want to get in early on this.
Yeah, and it just makes sense because it is going to be something that, I've never been on social media and seen like a reel of iOS spaces. So it's cool to be in that space for you guys because whatever content's out there or whatever you're posting on LinkedIn or anything, it's going to be unique and going to pique the interest of those who are like looking for something that, again, everybody should have a diversified portfolio. So when you come in with this opportunity that people don't really know a lot about, it's like a linchpin of diversification for a portfolio to say like, hey, this is kind of an asset class that nobody knows about. Let me stick it in here with some other stuff and see what happens.
Yeah, I'm hoping some brokers and some owners are listening to this right now, like on the West Coast that have deals for us.
Yeah. Hey, it's Jonathan. Look, if you're interested in this strategy, industrial outdoor storage, this is the only time we've talked this in depth about it. So if you want to learn from Blake, talk to him, his team, and see what they do, go to steelpeakproperties.com. Let's get back to Blake.
Well, so let's go into geography, though, since it came up. You're sticking strictly to the West Coast, obviously, because you're out there. But is there something that's better about the West Coast for this type of iOS product in terms of weather or anything that makes it a little bit better to stay out there for you?
It's more so like a competitive advantage because we're already based out here and we have a lot of relationships in these markets. And there's also a lot of the groups that started in this space came from the East Coast. And so they're all based out there. So they have a hometown advantage out there. Yeah. So it's a mixture of, less competition, more relationships. That's kind of why we're out here. We like the dynamics out here. Weather is also a good thing, but it also comes with maybe some regulatory stuff in like California or some of these other markets. But we're Western US focused. So Denver West up to Seattle, down to San Diego. So all of SoCal. And then we're buying these types of contractor yards that have, smaller buildings, large excess yards up to really like 10 acres, like 1 to 10 acre sites. It's kind of our sweet spot. So 3 million on the low end purchase price up to 25, really probably 25 is kind of where we top out. If sites get too big, it's a little bit harder to lease them. It takes a little bit longer. So, and you got to break it up maybe and lease it to a bunch of different tenants. That's really not our business.
Right.
We like more single tenant. Smaller single tenant deals are what we're focused on, and we're value add guys. So we're looking for stuff that we can add the value within like 2 years, ideally at the max, maybe 3 years. So we're not trying to buy stuff that has existing lease terms with the current tenant that's longer than like 2 or 3 years out from expiring. So that's one major change. Like there's a lot of deals where they'll do a fresh 5-year lease on it and then they'll go try to sell it at like a stabilized return. We're not those guys. We're the guys that hopefully bought that and leased it to the guy and now we're selling it to the next guy.
Yeah. So it makes sense. I mean, those are if you talk Denver, Seattle, and then Cali, those are like differential weather markets. Does weather play a role at all for what you're looking at? Or because you end up in a triple net lease, it doesn't really make a difference for you? I mean, of course, there's, the fires, and then that's obviously big for California, but does it affect you at all in this type of asset class?
It's funny. I was in Phoenix 2 days ago looking at sites and it was like 118 degrees and I'm walking around these like blacktop, like yard sites, and it was like the hottest day of the year so far. And all of those warehouses have AC in them. If they don't have AC in them, it's like kind of an issue, right? But then you go to colder markets, maybe like Denver, and then those guys have heaters in their warehouses. And then you go to California and there's neither. And so there's things like that. And then drainage becomes a thing because like if you're in Seattle, heavy rain, like that becomes an issue. If there's snow, that's a whole different story. California's got all these regulations on like paving and gravel. And so there's so much nuance, but every market is its own kind of silo. But then there's still like a lot of similarities, like fundamental wise, like macro fundamentals that work across the board if you know what you're looking for. So, but it's specialized.
Yeah. So, I mean, if you were talking to someone who wants to get into real estate, would you say that the path that you got on was advantageous? Because it's really interesting. As I said earlier, I think most people just kind of fall into like, hey, let me do a house hack and let me, get my, residential license and figure out what I'm going to do. But everyone quickly realizes, like you did, there's not really a tremendous amount of scale in there unless you get like really, really good, but it's still a different scale.
Mm-hmm. Mm-hmm. Now that I look back, I'm like, wow, the route that I took like kind of ended up being perfect for where I am today. But I always tell people, I meet with a lot of younger guys and gals, and I like kind of like mentoring people and helping them get into, the space. And sometimes I wish I would have started at JLL, like in college, And I would have had a little bit longer at JLL and just been, at one shop and learned and worked my way up quickly at a younger age. I hopped around to a couple boutique shops before that. But if you look back, the experience I got at the boutique shops, I was cold calling like crazy. And, at JLL, a lot of the times you don't have to cold call as much because they have bigger accounts and they're servicing larger portfolios already. So bringing that cold calling experience and kind of like grindy, boutique experience to a bigger shop helped right when I got there because I shot up pretty quickly. Yeah. But part of me is like, just go to the big shop first, learn as much as you can, then go to the small shop for a little bit because you get better splits, make as much money as you can and start buying a couple deals a year at a small shop or start your own company. And so you control your fate, and then you can start getting into the investment game. And then once you buy a couple deals and you understand it and you have a little bit of credibility, then you can go start raising more capital from friends, family, institutions, whatever it is. And you'll have a way easier time of raising that capital if you have a big JLL stamp on your resume too. Because you've been there and you've been working with those groups already.
Yeah, and that proof of concept is really important. I find it unusual when people think they can just go out and raise money and have never, they don't have a product or a scale that they can say, hey, look, this was my turn in it. And I think that's just like, you were already thinking long term when you were younger. And that's kind of the difference between short term and long term. It's like you need to grab a couple yourself, show that you can do it, prove it to yourself. Hey, like I can turn this asset class that makes sense before you go out and put your hand out to the first friends and family and then to strangers.
Yeah, exactly. It would have been a little bit more difficult if I didn't have the experience already selling and leasing these things.
Yeah.
So I already had some credibility there, and I was able to leverage my partner's credibility as well. But if you're not in real estate, like I think the best thing you can do is to build up your own personal income and then partner with someone that does have some expertise and utilize their expertise to get into the game and get a couple going and learn from them. And then, but I highly recommend having a partner. Like I have like multiple partners. So, and that's like, this business is like, you can never know everything. So like having people that have different skill sets that can link up and do deals together, that's the best part about it.
Yeah. I mean, and if you go all the way back, it all started at, a college real estate club, which I think is really encouraging for people out there who are, low 20s or even under 20. And they're just like, college is cool. I'm partying all the time. But if you just get into that club, it could change your mindset quicker because I've always, I've been talking to a lot of people about like what my kids were taught through middle school and high school. It was nothing about money. I can tell you that. They certainly didn't know about real estate outside of me. And my dad gave me all of my real estate education. But I wish that I bumped into things. The first time I bumped into a class, like in college, I was a criminal justice major, so I didn't take anything like that. But in law school, I took property, and it was like all real estate. And I was like, geez, I know all this stuff. This is crazy. But what you're saying is really going to give people hope that if you can just find the club, then maybe you find the courses, and then maybe you're able to start to look a little bit more long term when you're in college and not, be grasping for the FIRE movement right away, but grasping for, hey, like you said, build a career, build income, learn about it, invest myself, and then start going bigger.
Mm-hmm. If you're going to be there and just go through the motions and stumble your way through it and, hung over the entire time and not be proactive and like kind of join as much as you can and get involved and be social, like the social aspect of it is worth the money. The curriculum might not be, but the social side of it and getting into these groups and stuff and getting internships while you're there. If you have to work through college, like still finding the time to at least go shadow someone and intern with a group and then have your bartending job or whatever you got to pay for school, like take out a loan so you can go get the social side of it and the internship side of it where you're getting like real action, like in the game, working with people that are doing it. And then when you come out, you'll make more money more quickly and you'll have a lot of connections and then you can pay off those low interest long-term loans anyways later. But don't waste that time that you're there because you'll miss out on all the social stuff.
Yeah, and what better time to do an internship when you're in college? Nobody expects you to be holding down, a $50,000 job as well. So you have the time to give for free and learn, and you're kind of eager. It's the perfect step up, like you said, so that when you get out, you have some connections. Maybe you didn't know a ton when you got in, but you certainly know a lot more than everybody else graduating in terms of business if you've done a couple internships at things that you weren't sure if you were going to be interested. Maybe it's not going to be your full career, but you're putting stuff on the plate that can help you figure it out.
Yeah, exactly. I'm telling my little brother right now, I'm like, come on, man, you got to come shadow us. Let's go.
Yeah. Yeah. I mean, well, I did that for my dad. My dad literally just dragged me to properties left and right. So I was just learning on the go. And I think that, as you're saying, like when you went and you do your first internship, you are a low totem pole, but all you have to do is be a fly on the wall and listen. You're going to hear literally everything. You may not even know what they're talking about, but later you'll understand what you just heard. And I think it just prepares you better than a classroom setting where they're just going to make you read a book that was, written 35 years ago on real estate.
Yeah, exactly. You got to the content is fine, right? That's one level of knowledge, but putting it into practice is a whole different thing. So you got to get a mentor or go hire a coach. I don't really recommend this to everyone, but I pulled out an interest-free credit card when I had no money when I was a kid, still in my early mid-20s, and I hired a performance business coach. I bought a $3,500 commercial real estate course. I took as many courses as I could. I had no budget on books, and I did that for 12 months, and I 7x'd my income that year. After I invested all that, I spent maybe 10 grand on myself, maybe a little bit more, and all interest free for 15 months. And then I went and shot up and did a bunch of big deals and paid that off easily. And it was on to the next from there. Yeah. So you gotta take a risk and you gotta invest in yourself.
Yeah. And I think the difference there between you and other people is you paid the 10 grand, but you were knowing you're I'm going to get the value out of this. I feel like some people get that $3,500 class thinking it's going to do all the work for them. And then they're like, well, I didn't know I actually had to read stuff and actually go out and make calls. I thought it was just going to I pay $3,500 and now I get, $26,000 in the next month, and that's kind of, again, that's a short-term, long-term thing that seems you never fell prey to, that short-term mindset.
Yeah, exactly. You got to actually go do the work, but the content and the knowledge builds up your confidence to go take action. Yeah, so that's the first step. So if you're not actually reading and learning the content, you're going to have zero confidence to even go out and do it. It's a balance of both.
Yeah. And if you don't find that group or meetup, you have no one to talk about with the content. So you don't know if you're really soaking it up the right way. Once you take that podcast and books and these online courses, and then you meet 3 or 4 people who are also interested, you're already starting a next level of education, because now you can bounce the ideas around and say actually, I didn't think about that. That's great. Instead of just kind of doing it all yourself, that becomes harder and much easier to fall into analysis paralysis if it's just you.
Yeah, I mean, we're still learning so much, myself and my business partner too. We're constantly meeting with people who have done, what we've done for the last 20 years and have built, big businesses. And we're going out and building up, team of advisors, and we've got our mentors and all that. And we're learning constantly. So it never stops. You got to make that part of your lifestyle.
Yeah. So at Steel Peak, if somebody's out here listening and they're like, man, I'm really interested in this asset class, who's the avatar of people that you want to work with or that you want to give you guys a call? Who is investing in your deals or helping you guys in any way?
Brokers are a big part of our business. So if you're doing commercial real estate in any of, Western US markets, and you're focused on industrial, or you want to, send us some deals, we would love to chat with you. You can find me on LinkedIn, or you can shoot me an email, blake@steelpeakproperties.com. And then if you own some of this product too, or if you're a tenant and you're trying to find space, we can help you find space, because we're buying a bunch of deals, and we love to connect tenants to some of our off-market properties.
Yeah.
If you know someone that works at one of these companies, or I'm happy to connect. Investor wise, it's a little bit tougher because, we're doing more institutional deals, but if someone wants to, ask us some questions, we're happy to chat.
Yeah. And the best place to find you guys is steelpeakproperties.com. And that's steel, STEEL, peakproperties.com.
Yep, exactly. Steel like the metal, contractor focused.
Yeah. Yeah.
And then, properties.com. And then you can just hit me up on LinkedIn too. That's easy. Or Instagram. I'm on Instagram too.
Yeah. Awesome, man. Well, it's been a pleasure. I really enjoyed the conversation. We've definitely never done this iOS asset. So it's interesting to get into it, talk about car junkyards and what the transition can be. And like we were saying, like there's not a lot of people in your space. So I'm sure you will get some calls and some inquiries just saying like, this is pretty interesting. And especially like you said, from tenants, I mean, it's not easy for them to find when they have a large scale business and there's not a lot of opportunity.
Exactly. I'm hoping people don't think this is a discussion about iPhone updates or anything like that. So
when make sure to not put iOS in the title. I gotta
when they see the title. You got to put industrial and then parentheses iOS.
I'll leave it out altogether. They can figure it out just when we're talking about it.
I love it. Well, thanks for having me. Appreciate it.
Yeah, awesome, man. I really appreciate it. And I look forward to staying in touch.
Great.
All right. That was Blake Rodgers of Steel Peak. You can find him again at steelpeakproperties.com. I'm Jonathan Green. We'll see you next episode.
Thanks for sticking around to the end so you can get a preview of who's coming up on the next episode of Zen and the Art of Real Estate Investing. And for episode 280, it's my friend Joe Killinger. He's been an active member in the real estate industry for more than 30 years, but he's done a lot of different things, and we talk all about them: agent, investor, syndicator, founder, and operator of companies, as well as properties he invests in. We go all through it. This is a wide-ranging show, someone who's had a lot of different experiences in the business. We'll see you next episode with Joe.